Hey founders, Kirk Mitchell with Candor Advisors here. Checking in with three important keys if you are in market right now or planning to go to market soon. It's a tricky M&A environment in the sense that kind of A-tier companies with great professionalized financials and platforms, great margins, strong EBITDA, they are still trading at the multiples that we were seeing last year and the year before. On the other hand, companies that aren't quite there yet are kind of getting picked apart because the private equity firms and even the strategic buyers have higher cost of capital, bigger hurdle rates, more challenges, so they need to push the prices or multiples down. So the key thing to remember with these disparate headwinds right now is a few things. One, the number one secret to selling a successful business is knowing your why. So why do you want to get out of the business? That drives what kind of back and forth you're going to have. Remember that why when you're in due diligence and you're getting pressure to change the price. If the pressure to change the price seems reasonable and you can still meet your why by getting to the end, see if you can extract some different terms, because generally speaking, between a willing buyer and seller, there's always a way with structure to get to the end of the deal. Second, if your plan B was to keep running the company and not sell it if you couldn't get enough money or you couldn't get the right terms, remember that your plan B is still a reasonable option. Don't let the sunk cost fallacy of deciding to go to market and committing to that let you suck you into a vortex where you can't pull out of it. Remember your plan B, stick to it. Don't bluff with it if you don't want the bluff called, because buyers are definitely calling bluffs these days. But if you're okay with continuing to run the company, if you don't get your number, stick to your plan B. Most letters of intent are non-binding, so you can pull out of due diligence if it looks like you're not going to get what you need. And then third, think about the idea that there are alternatives to a sale to an outside buyer. Something like an ESOP or a partial ESOP where there's some leverage involved and the right configuration can be a tax-advantaged way to sell your business over time to your employees. And there are a lot of banks out there that are willing to finance it. Management buyout. Some key employees will borrow money from, say, a structured equity or mezzanine firm to buy most of your equity out and continue to run the company, and maybe you get a second bite of the apple that way. So there are alternatives to a sale to an outside buyer or a traditional sale. So remember those three things. Know your why, make sure it lines up. Second, remember your plan B. That could serve you well as a good alternative to getting retraded. And third, look at alternatives to a sale to an outside buyer. Look, if we can help with that, with an unsolicited buyout offer for your business, challenge in due diligence, or just questions around valuation and whether it's the right time to go to market for your business, go over to our website, candor-advisors.com. Look at the insights section. There's a lot of great, helpful videos there. Cost you nothing. And if there's something you think we can specifically do or a question you have, click on the green button, talk to Kirk. That's the call to action. Let me know how I can help. Thanks. Have a fantastic week.